Welcome back to another episode of PyUncut Finance, the place where money meets clarity and your financial future gets a strategy upgrade. Today, we're diving into one of the most underrated wealth skills in the investing world. And no, it's not stock picking. It's not timing the market. It's not even finding the next NVIDIA. It's tax optimization. The wealthiest families in America don't simply earn more money, they keep more of it. And with 2025 coming to an end, you have a small but powerful window to make smart moves that could lower your taxes today and multiply your wealth tomorrow. So, let's break down 12 year-end strategies that quietly create millionaires, and most people never use them. Segment 1. The most predictable return you'll ever get. Let's start with the strategy that almost feels like cheating because it's that effective. Retirement contributions. Every dollar you contribute to your 401k or 403b reduces your taxable income by $1. It's a guaranteed, risk-free return equal to your tax bracket. For 2025, you can contribute $23,500 normally, plus $7,500 if you're over 50. And if you're 60 to 63 and your employer allows it, you can add an enhanced catch-up of $11,250. That's a massive tax savings opportunity that expires on December 31st. No extensions, no excuses. Segment 2. The triple tax-free secret account. Next, the Health Savings Account, or HSA. This is the only account in the U.S. that is tax-deductible when you put money in, tax-free as it grows, and tax-free when you take it out. It's literally the financial equivalent of a unicorn. In 2025, you can contribute $4,300 for individual coverage and $8,550 for family coverage. If you have an HSA and you're not maxing it out, you're leaving one of the greatest wealth tools on the table. And here's the part most people don't know. HSAs don't expire. No use it or lose it. Unused funds become your future healthcare war chest, completely tax-free. Segment 3. Turning losses into tax savings. Let's talk about a strategy that feels painful but pays off beautifully when done right. Tax loss harvesting. If any of your investments are in the red, you can sell them, capture the loss, and use that loss to offset gains. You can even use it to offset up to $3,000 of ordinary income each year. And here's the kicker. Losses carry forward forever. So you can build a bank of losses today that saves you money for years. But be careful about wash sale rules. If you sell a stock for a loss and buy the same or substantially identical stock within 30 days, the tax benefit disappears. Segment 4. Pay small taxes now, avoid huge taxes later. Let's talk about Roth conversions. A Roth conversion means moving money from a traditional IRA to a Roth IRA. You pay taxes now, but all future withdrawals are tax-free. If you think your future self will be in a higher tax bracket, and many will be, this is a smart long-term play. And 2025 is an especially strategic year because major tax code shifts may hit in 2026. That makes this year an important window for conversions. Segment 5. Should you itemize? Maybe yes, especially in 2025. You can deduct medical expenses above 7.5% of income, mortgage interest, state and local taxes, charitable donations, disaster losses. Speaking of state and local taxes, something big is happening. For 2025, the SALT cap jumps from $10,000 to $40,000. That's a huge benefit for households in states like California, New York, or New Jersey. But this expanded deduction begins phasing out for incomes above $500,000 and vanishes above $600,000. It's temporary and extremely valuable while it lasts. Segment 6. Wealth building for the next generation. Let's talk education. Two strategies stand out. One, the American Opportunity Tax Credit, a $2,500 credit if you spend $4,000 on college expenses. And two, 529 plans. These are tax-advantaged accounts designed for education. Some states offer tax benefits for contributions, and wealthy families often use a strategy called superfunding, contributing up to 5 years of gift allowances at once. For 2025, that could be as much as $95,000 per person or $190,000 per couple invested tax-free for future education needs. Segment 8. Small business, freelancers, and gig workers. If you're self-employed, here's a simple but powerful move. Delay billing until January. If you want to lower your taxable income for 2025, this is one of the easiest ways to do it legally. Segment 9. The smart way to donate. Most people donate randomly throughout the year. Wealthy people donate strategically. Strategy 1. Bunching. You group multiple years of donations into 1 year to exceed the standard deduction. The money can go into a donor-advised fund so you can distribute it slowly later. Strategy 2. Donate appreciated assets. If you give stock instead of cash, you get a deduction for the full value. You avoid capital gains taxes entirely. This is one of the single greatest tax hacks for investors. Segment 10. Give to loved ones tax-free. In 2025, you can give $19,000 per person to as many people as you want without triggering gift taxes. This is how families legally reduce taxable estates and transfer wealth efficiently. Segment 11. The ultimate retirement tax hack. You can donate your RMD up to $108,000 directly to a qualified charity through a qualified charitable distribution, or QCD. It satisfies your RMD, is not taxed, lowers your taxable income, and works even if you don't itemize. It's one of the most powerful tools retirees have. And Segment 12, why this year matters more than most. 2026 will bring major tax bracket adjustments, changes in deductions, and shifts in charitable rules. That means 2025 is one of the most tax-advantaged years you'll have this decade. If you've ever thought about optimizing your taxes, now is the time. Optimizing your taxes isn't glamorous, it isn't exciting, but it's where real wealth is built. Investing grows your portfolio. Tax planning protects it. Until next time, keep learning, keep compounding, and keep more of what you earn.